The fair value of most digital assets is determined by secondary market liquidity, but redeemable assets derive their value from their redemption rails. This presents an opportunity for a new type of liquidity venue that prices redeemable assets against their primary market redemption value, not secondary market depth. On AMMs, arbiters extract value by purchasing redeemable assets below their fair value. The ARM keeps the spread in a closed loop, funding LP returns. ARM vaults turn over capital quicker than AMM pools, yielding better returns for depositors. The ST-ETH ARM has earned depositors an average of 4.9% annualized APY, while the average ST-ETH/ETH AMM pool earned just 2.2%. The ETH ARM runs the same mechanism on a smaller TVL base, and the efficiency gap is even wider. The EtherFi ARM has generated 3 times the value per unit of TVL compared to AMMs, resulting in an annualized return of 4.22%. Because ARM continuously cycles liquidity through redemption queues, LP exits don't start from scratch. The ST-ETH ARM median withdrawal is 13 minutes compared to 1 to 5 days through Lido's native path. And the same structural advantage applies to any redeemable asset that trades at a discount to its redemption value: LSTs, LRTs, stablecoins, and RWAs. ARM does more with less, and the data proves it. Explore ARM vaults at app.originprotocol.com. Launched in 2020, OUSD has a multi-year track record of generating stablecoin yield for holders. It maintains a tight USD peg with deep liquidity on Curve and one-to-one redemptions for USDC. OUSD is fully backed by USDC and deploys collateral into a purpose-built Morpho vault, built in collaboration with Yearn Finance. Capital is routed dynamically to the strongest Morpho vaults based on real-time yields, incentives, and utilization rates. OUSD lives on Ethereum mainnet. Yield is sourced across EVM networks. By allocating to high-performance Morpho markets across chains, OUSD captures elevated lending yields and protocol incentives. Yield is returned to Ethereum's mainnet through Circle's CCTP. This multi-chain architecture allows OUSD to continuously route capital to the best opportunities available across the ecosystem. OUSD turns stablecoins into financial infrastructure. Instead of choosing between liquidity and yield, users get both with Origin Dollar. OUSD functions as a productive unit of account while remaining a composable building block that can move freely across DeFi. It's designed for capital that needs to stay liquid, remain stable, and earn yield at the same time. Origin Ether just got a major upgrade, bringing stronger security, faster compounding, and built-in front-run protection to OETH staking. In traditional staking systems, validator balances are verified through third-party oracles, adding trust assumptions and potential delays. OETH now verifies every validator balance directly against Ethereum's beacon using Merkle proofs. That means anyone can verify the data on-chain without intermediaries. It's a simpler, more transparent foundation for trustless staking. The upgrade introduces Ethereum's new 0x02 validator architecture, built for performance and scale. 0x02 validators reduce operational overhead by running fewer validators while enabling faster exit times and quicker compounding. New front-run protection ensures validator deposits and exits are executed as intended, protecting users from timing-based manipulation on-chain. Deposits to new validators are capped at 1 ETH to verify key ownership before opening additional deposits. OETH staking now runs on trustless data, optimized validator architecture, and built-in protection, setting a new benchmark for Ethereum staking.
Hello, everybody. Welcome back to Origin's community call for August 2026. Let's get a few team members up here. Hey, Pete. Hey, Raphael. How are you guys doing?
Not too bad.
How are you feeling, Pete? I know you're just coming back from a little procedure. Is the anesthesia worn off yet? Are you ready?
I might be a little loopy, but overall, I think it's mostly worn off by now.
Okay, well, we'll get through it. I'll go through the agenda first. We do have some fun updates today on some new ARM vaults, as well as some updates on OUSD and OETH. But here's the agenda for today. We're going to start with a few announcements. We just passed 1 year of OGN buyback. So in total, we've spent over $3.5 million from protocol fees to buy back OGN on the open market, which has been over 90 million OGN bought back in the past year. So some good progress there. In total, I think we're at like 105, 106 million OGN now. So there were some buybacks before the program began, but much more in the past year. So some good momentum there. As I alluded to, we do have some updates on ARM development. We launched a new multi-asset ARM that Rafael is going to talk about soon. And we're about 1 month into the SUSD ARM being public, and we're seeing really good yields there, about 8.4% APY on USDE over the past month. So we'll share some updates there as well in just a few minutes. Also, our token holder update is live on our blog. You can read that at originprotocol.com/blog. We just published that this morning. So if you guys want to read some updates, sorry for my dog. If you guys want to read some further updates on everything that happened in July, head over to our blog and you can get some more details there. We'll cover a lot though on today's call. And then lastly here, just a quick update on the ETH ARM. The contract was paused. Rafael, maybe you want to speak briefly on this. I believe the contract's on pause now, but wanted to share a quick update on the ETH ARM as well. Okay, I'll go through OGN buybacks now. Just a few updates here. So in total, 106.5 million OGN has been bought back from the open market. About 4.6 million was bought back in July. So progressing pretty well here. If you do lock OGN for XOGN, then you can earn up to 10.5% APY, and that's with no new token emissions. So it's all from protocol fees generated primarily by our ARM vaults and OETH, Super OETH and OUSD as well. So all of our products fund those OGN buybacks, and you can stake from anywhere from 1 month to 1 year. So if you stake for 1 year, you'll earn 10.5%. The APY is a little bit lower if you stake for a shorter duration. And in terms of how much OGN supply is currently locked as XOGN, we're still right around 50%, 47% to be exact, of circulating supply is currently locked. So that's the OGN update for August 2026. We'll move on, talk about some product developments. I'll hand the mic over to Rafael to start off with our new ARM vault.
Thanks so much, Ryan. Yes, so we are doing we had our first I would say stable coin ARM with SUSDE. We have been doing a very good APY here. It's right now it's still 8.3%, but there is a 2% of incentives boost. So this is already performing really well. We're already attracting a lot of trading volume from this pair, which is very interesting. So it's exciting to see our first stable coin ARM running out. But I feel like one of the most important things that we have was what we have been working for some time already, and it got live, which is in the next slide, which is our multi-asset ARM vault. So what this basically does is that what we launch one ARM, which is the wrapped ETH ARM, which can serve 4 assets right now. So before we had one ARM for staked ETH, and then we had one ARM for ETH, but now we have, and both of these ARMs didn't support the wrapped version. So we relied on the wrapped version to be supported through the DEX aggregators and things like that, which was a little bit removing us from direct markets, right? So right now, this one will be a lot more capital efficient because the same liquidity can now trade EtherFi ETH and wrapped EtherFi ETH, staked ETH and wrapped staked ETH, right? So this is very good. And I think there is one other part that I wanted to mention on this ARM is the dynamic allocation. So we can actually have one shared liquidity that can be used into many other assets, but there is an asset level control. So each lane can have separate pricing, liquidity limits, and all of that, which is very good for when we start onboarding new assets to this ARM vault. And if you go to the next slide, you're gonna steal some numbers, right? Like so, this is something that we have been tracking on June to see the size of the market, and right now our existing market is around 850 million. But if you just the wrapped tokens market is like 1.9 billion. So it means that we're gonna have like, I don't know, like a lot more markets for that. So it's a huge improvement for us. So I'm excited to see how this arm will perform.
Yeah, and this 3.24x, this is based on the staked ETH arm and the ETH arm combined, right? So it's actually a much larger increase. So if you were to combine, if you were an LP on both, just for staked ETH and ETH, then that's where that 850 million number comes from. So if you're just LPing to the staked ETH arm or the ETH arm, it's actually a smaller existing market, much larger for these wrapped assets. And then you mentioned the liquidity limits too, Raphael. I have a question about that. Are those limited by asset category? Like, is there a cap for wrapped staked ETH and staked ETH combined? Or is it per asset? So there's like 4 different limits.
It's per asset. So for example, let's say like that we onboard an asset that we don't want like a lot of exposure for our LPs on it. We can say that only 10% of that asset can be exposed like on the total LP value, right? So let's say like that, in case there is something bad happening with that asset, we will only buy 10% of the liquidity.
How are we thinking about those limits right now? Because we're only supporting staked ETH and ETH. Both of those have billions of dollars of TVL, probably dozens of audits. So I know we're comfortable with these assets. So is this more like forward thinking for future assets that we may include in the ARM, or is there specific limits now between ETH and staked ETH?
I think it's more on how we're future thinking about it and the features that we want to have on it, because ARM is not just about the LSDs that we're doing, that we know how to like check them, but we are more thinking about like different type of assets, maybe RWAs, like more stable coins and things like that. So that's a thing that where these like features came in. But yeah, like I think this is good to have.
Awesome. And I know the WETH arm is live. There's a QR code on the top left of your screen if you want to check it out on the Origin dApp. It's only been live for maybe 7 days now or so. The yield is still ramping up. I think we had a pretty strong day. I think it was yesterday or today, but it seems like yesterday. And do you know what that number was?
Yeah, well, we already used all the liquidity, so like I think it was around like 4% of yield. But there is also an incentive reward of 1.5%. So the LPs have earned 5.8%.
It's a pretty strong number.
Yeah. And the rewards incentives will be there for 1 month. So excited to see.
Yeah, and hopefully the yield starts ramping up. We sort of saw that with the SUSDE arm when we were testing it. We were testing it, I think, with like $30,000 to $50,000 worth of USDE. And then once we started getting more liquidity, we were able to take advantage of bigger trades, and we saw the yield ramp up. So hopefully that happens with the WETH arm as well. We're sort of seeing it trend in the right direction right now. So I'm excited to see where this lands. I think the APYs right now are really early on, so it's hard to tell where it's going to level out at. But it's headed in the right direction. So I think that trailing APY, it looks like it should be increasing over the coming weeks, but we'll see what actually happens here.
Exactly. And I think there is like one extra little alpha here is that we are playing with a USDC arm that arbitrages other stable coins. So this is one that it's kind of already running in private, but we still want to tweak it a little bit before launching it.
And Raphael, are you comfortable sharing who we're partnering with for the USDC arm yet, or should we save that news maybe for the next call?
Let's share for maybe the next call.
Okay. Yeah, maybe we can have them. Maybe we can have them on next month, and we can talk about it together. But yeah, a new multi-asset arm is coming for USDC as well. So different stable coins that have the base asset of USDC can be supported by that arm. It'll be a very similar design to this WETH arm that is currently live.
Perfect. Yeah, I think we have like one last point to talk about ARM, which is the EETH ARM. So we needed to pause the contracts like last week because we got a bug bounty on Immunify, explaining like that there was a bug introduced by an upgrade that happened on the redemption system of Etherfi that affected us. So they changed a little bit how that system works, and that causes our contracts to have a bug. So we immediately paused the contracts to make sure that there was no funds at risk, no funds were lost, and any of that. But instead of trying to fix it there, we already launched the new one that doesn't that it's not don't have this issue anymore. So this is good. So that's what we are offering people to move to the WETH arm, and that's why we added some extra incentives there. But for those who are listening right now, that on the EtherFi arm became just a wrapper of a lending market. So I definitely encourage you to do the migration.
Yeah, so right now the ETH arm is only earning lending market yields through Morpho. It's probably 1 to 2% APY. It's not earning yield through arbitrage anymore. So it's strongly encouraged to migrate over to the WETH arm, where you can earn yield from arbitraging both EETH, wrapped ETH, and the staked ETH tokens as well.
Exactly.
Okay,
Cool.
I think those are all of our updates for ARM vaults. Raphael, you want to talk a little bit about OUSD and what's happening here?
Yeah. OUSD, we're still doing very good. Like I think we're above like I don't know market rates on such a low risk product. So we are doing like 5.5% on the 30 days average. This is higher than most of the other like stables that are giving like a very low risk exposure. So if you want to see the market allocation, most of it is like in between OETH, CBBTC, CBXRP, Super WETH, and Hyperliquid wrappers. So yeah, like so that's how we're doing that. We are distributing USDC across Ethereum, Base, and Hyperliquid, and hopefully we can get this scale more soon.
Yeah, it's been nice to see that OUSD yield has been over 5% for several months now. We made this upgrade to OUSD at the beginning of the year, and back then the APY was pretty in line with other yield-bearing stablecoins, around 3.5% APY. So about a 200 basis point increase since that upgrade has happened, and it's been fairly consistent. So really good to see.
Exactly. I guess this is it for me.
All right. Thank you, Raphael. We'll head over to ecosystem integrations. I'll hand the mic over to Pete to talk a bit about some ecosystem updates.
Thanks, Ryan. I am sharing my screen now. If you or Zayad could switch over to what I'm sharing. I pulled up the tabs for all three that were on the last slide. So Mintly, OpenCover, and Morpho. Mintly is a newer protocol that I think did come on here and showcase the protocol maybe a month or two ago. But they're essentially an integration that's utilizing the Virtuals AI protocol to allocate funds across several of the Origin protocol products. As you can see on the right side, they've got OETH, the Lido arm, and the EtherFi arm all set up to receive some liquidity, as well as OUSD. And then the protocol will essentially reallocate the liquidity, at least for the ETH products, between the two arms and OETH itself. I'm not sure how often they actually do those reallocations. I think maybe it's either once a day or once a week. But I assume we'll probably see a reallocation soon, since it looks like the Lido arm is higher yielding than OETH itself right now. But a lot of the backend is done on Base, actually, through Virtuals. But they did actually just add Robinhood support, Robinhood chain support, not that long ago, which you can't see just looking at it in the view that I'm looking at, but you will see it if you go to deposit. You can see that you can toggle to the Robinhood option, where I guess the funds will essentially be bridged from Robinhood chain over to Base for Mintly to be allocating it to the Origin products through ETH mainnet. And so this is like an easy way coming from the Robinhood chain to take advantage of the yields that you're able to capture utilizing the Origin products, which is cool to see. So I guess we're hoping that Robinhood chain takes off and that Mintly is able to kind of take off with that chain so that we can see more TVL streamed through the Origin products.
Yeah, what I like about Mintly is it's built solely on top of Origin products, right? So if somebody's depositing 10 ETH into Mintly, then that's 10 ETH of TVL for Origin. It's not being allocated across a bunch of different protocols. It's just different products from Origin. And it is cool to see that they supported Robinhood Chain fairly early on. It seems like there's a lot of talk about Robinhood Chain on X right now. And hopefully there's a meme coin rotation into DeFi on Robinhood Chain. It seems like there's a lot of activity going on Robinhood Chain at the moment.
Yeah, and you're definitely right. There has been a lot of talk about Robinhood Chain on X lately, and I have seen Mintly come up a lot in those messages and threads. They also just added staking, I believe. This wasn't here when they came on this call a couple months ago. So this is definitely one of the newer additions to their protocol. I can't talk much about the price of MLY, but this is going to be their protocol token, I assume. And I guess it's native to the Robinhood chain as well. So check out Mintly, play around with it. If you have any feedback, share it with us and we can pass it on to the Mintly team or reach out to the Mintly team directly. I think they're pretty active through their socials. Then OpenCover is the insurance protocol that added support for the two previous ETH arms a little while back. Maybe we'll see if we can get them to support the newest ETH arm, hopefully sooner than later, as well as the stablecoin arm through Athena. But I think I've mentioned this protocol before. This insurance protocol works very different from previous insurance protocols in that you never have to actually select a duration for how long you want the insurance to last. With the older insurance protocols, you had to select a certain amount of time that you wanted to be covered for, usually ranging from a month to a year or maybe 2 years, and essentially you're paying out of pocket for that coverage. Whereas on OpenCover now with this new primitive, the cost of the insurance comes out of the yield itself, which is kind of nice. So you can kind of see the breakdown by hovering over the shield here, where you can see that the ARM APY is that 2.1 and the cover cost is the 1.3, so it does the math for you, gives you that net 0.77. So that would be the cost of having coverage for the ARM. And they have a fair amount of capacity available, I believe, which is nice. I think there's about 20 ETH in the Lido ARM, and I actually don't think there have been any deposits in this other ARM vault yet. But maybe that's okay if it's going to be replaced by the new ARM. So we'll see. But they actually have launched a bunch of different vaults now. When we first got supported here, we were maybe one of 3 or 4, and now there's what feels like a couple dozen. But we're still being supported for now, and until everything gets switched over to the newest ARMs. But these guys have been building for a little while, and they work a lot with Nexus Mutual, has been around for years. And I guess they use some of the same auditors that we do. Nevermind is a reputable firm these days. So I would give them another look while they're still supporting the ARMs. And then I had just 2 morpho markets for today, which is the 2 borrow booster markets with Super OETH and OETH. Super OETH obviously on base, OETH on mainnet. And as a recap with these markets, these are very different from other types of lending markets on morpho. And what's different about them is when you deposit your collateral, you don't actually earn the yield from the LST on the collateral side. All of that yield gets forwarded to the borrow side, to the USDC side, essentially as an incentive to decrease the cost of borrowing, which you can see if you hover over the little tooltip here. You can see that 5, it's kind of small on my screen, so it might be small on your screen, but it says negative 5.39% against the actual cost of borrowing, which is 3.82. So when it does the math for you, that gives you a net rate of a negative 1.57, which essentially means it's paying you to borrow, which is kind of an interesting concept that you don't see very often on money markets. And so every new collateral that gets deposited into this market will add to the incentives that are getting generated and sent to the borrow side. But really, it's those who are borrowing the most amount from this market that benefit the most because they're getting the majority of that yield. So I would keep that in mind when deciding on how much LTV to take out. Actually receiving this yield, you need to go through Merkle, which I think this takes you right there. Yeah, this link will take you right to Merkle, where you would claim that yield. The other OETH market works the same way. It's just the rate is not quite negative, although it's pretty close. All of the OETH yield that's being generated is not going initially to the collateral depositor, but going to the borrow side to make it almost zero to borrow from this market. Very close, but that's all coming from the yield offsetting the native rate, which is actually looks to be higher in this market. I see the native rate is native rate is 6.11, and the OETH yield is taking off 4.87% of that, which gives you that net 1.23. Not quite negative, but easily one of the cheapest markets to borrow a stablecoin against ETH, at least right now.
And this market has been negative in the past. I think this is actually on the higher side. It's usually hovers between like negative 0.5% to 1%. It looks like the utilization is a little bit higher than the target right now at 90.1%. But yeah, usually this is under 1%. And even at 1.2%, this has to be one of the lowest borrow rates in DeFi, especially at this size. The market size is 8 figures now, above $10 million. So if you're looking to borrow USDC, this is one of the best options on chain, no doubt. And especially if you're taking out high LTVs. So Pete sort of alluded to this, but if you were to use a regular LST market, you would be earning the 2.5% or whatever you're earning in liquid staking rewards on the supply side. But you can see, Peter, if you hover over the info again, I know you already called it out, but the incentive rate is on this market looks like close to 5%, maybe 4.87, small text there. But that's almost double the rewards than you would get just by earning from the liquid staking rewards. And that's because there is a lot more supply earning yield than there is funds being borrowed. So if half of the funds are being borrowed and there's double as much being supplied, then you're essentially earning like 2x the liquid staking rate. I think that number was even higher for Super OETH, and that's how we got to that negative borrow APR, where you're actually getting paid to borrow USDC. Negative 5.3% in rewards. So after that native rate of 3% and change, it's over negative 1.5%. So both really strong borrow rates here, really even lucrative to borrow on the Super OETH market.
Yeah, keep in mind to everyone that's listening right now that you only are going to receive that 5.39% and the 4.87% if you are borrowing. So if you're not borrowing, you're essentially giving up that yield to everybody else. So just keep that in mind. If you're going to use these markets, it does make sense to both lend and borrow together.
Yeah, if you're not borrowing, then check out the wrapped token markets, the wrapped OETH, ETH. I think there may be also a wrapped OETH USDC market. But any of the Morpho markets that use our wrapped tokens, you'll be earning on the supply side instead of the borrow side. So if you're doing a more passive strategy where you're not borrowing, then check out the wrapped token markets. If you're taking out high LTVs, definitely check out the borrow booster markets.
I do have the wrapped OUSD market here. Actually, I pulled up from another screen. The borrow rate is a little bit high on it right now. Unfortunately, I think this is pretty close to the current yield of OUSD. So borrowing from this market doesn't exactly earn you much more yield if you were to try and run like a looping strategy. But we are actively talking with additional curators to try and get more USDC allocated to this market, which should make that rate go down because I think utilization is high. Yeah, utilization is high right now. So that should bring the rate down, which would make this market a good place to do some leverage looping as well. But stay tuned as we continue conversations with additional curators. Hopefully by the next community call, we'll have a more favorable rate to share. But this is the current one. I think that's all I've got, Ryan. If there's no other questions that have come through.
Okay, sounds good. Thank you for those updates, Peter. I think we can wrap up here. No special guests today. If you want to read up on more details from July, head over to our blog. Our token holder update is published now. And then join us next month for our community call, because we will have a big announcement on the USDC ARM, which will be our second multi-asset ARM deployment. We're partnering with somebody very big for that one, so hopefully they'll be on the call with us to talk about it. But Raphael, Peter, thank you for joining us. We'll catch you next month. Bye for now.
Have a good one.